Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, to discuss what to watch with jobs data and bank earnings. It is great to see you as always, Randy. Welcome back to Trade Talks.
Thank you, Jill. Thanks for having me back.
You got it. Let's talk about the JOLTS data. The jobs opening that we got this morning fell to 9.93 million in February. This is the first time it dipped below 10 million since May 2021. Is this a sign the super tight labor market may be loosening up? And could this impact the Fed's calculus, or is it too soon to make that assumption on one data point?
Well, I think it obviously does show that the labor market is loosening up a little. As you said, this is not quite, but close to a 2-year low. But there again, almost 10 million is still an awful lot of jobs available, and it is a very slight dip. So I don't think that it necessarily means that it's a big change. It just means that the trend is going in the right direction. Now, whether or not it affects the calculus for the Fed's rate tightening, at the moment, we're kind of at a 50-50 for the next hike, which is in early May. If it doesn't get above 60%, it won't happen most likely. And if it's just below that, we're right around 50%. It's frankly a coin toss at this point, whether we get another hike or not. I think the Fed said they would like to do that, but I think we had enough data, including a couple of big inflation gauges, PPI and CPI, in the next couple of weeks before that date shows up, that will probably have a bigger impact. And also the payroll numbers, as you mentioned, on Friday.
Let's talk about that, because equity markets are closed for Good Friday, even though the government offices are open. Therefore, that key non-farm payroll report still is going to come out, even though no equity traders are going to be on the desk. Now, Randy, traders typically position differently over 3-day weekends. Will this have any impact on that?
Well, it is an unusual year, as you said. The last time this happened was in 2021. So it does happen occasionally where you get a Good Friday on the Friday and the markets are closed that day. You get the payroll numbers. You know, what it will probably impact is simply what happens as soon as it comes out. Typically, we know it comes out a little bit before regular equity markets open, although futures are open, and you tend to get a very sharp move in one direction for a few seconds, another sharp move in the other direction for a few seconds, and then it levels off to about wherever it's going to trend. In this particular case, you won't then have equity markets opening until Monday. So what will probably happen, of course, is this will give 3 days time for all of the investors to look at the data, dig into all of the individual components, and then make a rational decision on which direction they want to go, if at all, come Monday morning. So I think, frankly, it'll just lessen the volatility, that immediate knee-jerk reaction that you often get.
And the banks kick off earnings season next week. What will you be watching for with the banks, considering the volatility that the sector experienced in March?
Yeah, probably the most interesting part about that is that the very first bank to report is First Republic, which of course has been right at the top of the news cycle on this whole event, down about 90% year to date. It's the one, of course, that got the big deposits in from some of the other big banks. That's, believe it or not, on Thursday, the first bank to announce. I don't know what's going to happen. I mean, they could obviously do a little bit better than expected, and there's certainly a lot of room for that stock to bounce up. Or it could be a disaster because of everything that's gone on, in which case it could go even further down. I mean, even though it's already down, as I said, about 90%. I would pay more attention to what happens on Friday. On Friday, you got 4 really big banks, PNC, and then some big giant money center banks, Wells Fargo, JP Morgan, and Citi, all announce on Friday. I don't think any of what's happened in the banking sector really affects these big giant money center banks, because they're not only geographically diverse, they're also diverse in terms of the client bases and the industry that those clients are all in. So they really don't have this sort of localized, concentrated risk that, you know, Signature and Silicon Valley and those types of banks have. But it could still set, I think, a precedent for what we would expect from maybe at least the rest of the financials going forward. It's a challenging environment, and with interest rates as high as it is right now.
All right, Randy, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.